baby, we got a big day coming tomorrow, and we had a big day here in the stock market today. The S&P 500 closed down 1.15%, going up about 0.12% here in after hours. And what has been happening over the last 2 days is really indicative of algorithmic trading, and we have a major event tomorrow. So what's going to happen? Is AMC stock, as well as other stocks, going to go higher? Or are we going to see a little bit of a muted response, possibly a big down day? Well, that's what we're going to talk about, how this really could affect AMC. We're going to go over the Ortex data for AMC, the Ortex data for actually the S&P 500 as well, to take a look at the option activity, the calls and the puts that are on the option chain, and the activity that happened today, because it's the day before Powell. You definitely want to pay attention to that information, how big money is positioning their portfolios. So let's dive into all of this information. If you guys find value out of this video, do me one thing and one thing only: hit that like button and subscribe to the channel if you guys have not already. If you guys want to come trade with me live in real time, link down below in the description as well. Now let's get straight into what happened today. Now, we did get the Canadian inflation report at 8:30 in the morning. You got existing home sales at 8:30 in the morning, as well as pending home sales and new home sales for the month of September. All of that data came out at 8:30 in the morning, and you see there was a little red candle at about 8:30 in the morning, right? It gave us a bearish tone because that data was not good, but it's not the main reason why the S&P 500 is down 1.15%. It's simply due to valuations, right? The markets do this almost every time we have a Fed rate hike coming. The markets say, hey, you know, the Fed's going to be raising rates, so the multiple that we are willing to pay for stocks has to come down. And it seems like the couple days leading up until the Fed, the markets are rapidly repricing things. They're rapidly saying, hey, the S&P 500 shouldn't be trading at a 19 PE. Maybe it should only trade at a 17 times PE. So I think that's a big reason why you've seen this down move in the stock market. A lot of it is the trading algorithms, but at the same time, we have not really had any positive data. The data that we have gotten has all been pretty negative. Now, why that's key heading into the Fed is because we kind of know what's going to happen, right? Like, let's be honest here. Why would people be nervous about tomorrow? Well, maybe they think the Fed's going to raise rates by 1%, which it's possible they do that. But in the last 40 years, the Fed rarely ever deviates from what the markets are pricing in. And the markets right now, with an 83% certainty, are pricing in a 75 basis point rate hike. Only 19% of market participants are expecting that 1% rate hike. So I think to sit here and say I'm fearful about a 1% rate hike, which is probably not going to be coming, you know, should I sell stocks? Well, probably not. But trading algorithms, they play off of that fear, at least heading into an event. And then once we get the information, which we already knew, right? We already know the Fed's going to raise 75 basis points. We already know they're going to be very hawkish. We already know they're going to say some very hawkish things, like they're probably not going to cut rates anytime soon. They're probably not going to slow down raising rates, and that they still want to get inflation down to 2%. Now, once you get that information, it's like going to the dentist when you think you have a cavity and you don't have a cavity. Or maybe you do, and they're like, yeah, you got one cavity. Well, cool. I knew about that. I'm no longer as nervous because maybe I had a bunch of cavities, right? Or maybe you go to the doctor's office, right? And you say, hey, this is wrong with me. You got arthritis or something. And they're like, yeah, it's all arthritis. You're happy because what if it was something else, right? That's kind of the same logic heading into Jerome Powell that the markets have. What else could he do? Which 99% of the time, Fed Jerome Powell gives us nothing out of the ordinary. No new information. This time could be a little bit different, but if we get a 75 basis point rate hike, if we get a hawkish Fed, if we get just a lot of negative things. The markets already expect that, so it really shouldn't be something to continue to sell stocks off. And I think that's a big reason why certain sectors did good today, well, better, and some sectors did very, very bad. So if we look at how the S&P 500 is broken up by market cap and see how the actual sectors of the S&P did today, well, you can see that real estate was the worst performing sector, down 2.58%. Materials down 1.89%. Consumer discretionary down about 1%. Communication services down 1.6%. And then if you go all the way down, information technology was only down about 0.45%. Consumer staples down about 0.55%. Energy down 0.5%. Industrials down 1%. Financials down 1.56%. And consumer discretionary only down 1.65%. Consumer discretionary would be something like an Apple, right? Your iPhone, or over a generic phone, right? That's a consumer discretionary item. And the communication services, that's a big one in the tech field. Financials, big one in the tech field. Information technology, big one in the tech field. So what did you notice today? Tech actually didn't do that bad relative to other things that were down. Just purely looking at the indexes here, the major averages, the Nasdaq was down 0.95%, the S&P was down 1.13%. So the fact that you're seeing a lot of your tech stocks that have a large weighting of the S&P 500 that actually did remarkably well today, and some of your real estate sectors, your traditional sectors that get hurt when interest rates go higher, that did much more poorly than technology, that in and of itself is something that makes me lean a little bit more bullish. Because if people were actually fearful about the Fed and about technology heading into tomorrow, well, they're going to sell off those technology stocks and not necessarily as much real estate stock or, you know, consumer staples, right? They're not going to sell off as much of that stuff. They're going to sell off your technology, and that did not happen today. So I think that is a bullish thing in and of itself, and I think that's one of the main keys to actually get out of today. Now for tomorrow, you do have a couple ECB speakers around 3 o'clock in the morning. That's when Europe's going to be doing their whole shebang, when that's going to be morning over there for them. So watch for any moves in pre-market that could, move things around for the American markets, but I doubt anything crazy is going to come out of that. Now, 10 o'clock in the morning tomorrow, you have existing home sales for August, but forget about that. That's not even going to move the markets. What's going to move the markets is, like I said, the Fed. The Fed interest rate decision at 2 p.m. FOMC economic projections at 2 p.m. as well. The Fed's going to say, hey guys, we expect growth by the end of the year to be XYZ number. We expect inflation to be X number. We expect the unemployment rate to be X number. We're going to get new insights from the Fed and what the Fed thinks as far as what's going to happen with the economy. And if there's one person I care about, or a group of people that, what do you think about the economy, right? It's the Fed. And that's why that will be so important. Usually the FOMC economic projections, when we get these every couple of Fed interest rate decisions, they tend to be more volatile events because we get a lot more information from these different Fed members. Now, if I'm sitting here and projecting a bullish reaction from Fed Jerome Powell, well, you can imagine something like AMC would see a massively bullish reaction. Not just because of, what AMC is. That has a lot to do with it. It's seen as a risk on stock. And when the markets go risk on, usually after the Fed, AMC just tends to do well. This is not rocket science. We've seen this happen many, many times. But AMC stock has also gotten beaten down over the last couple of days as well. And really getting back down to these lower end levels. So just overall, the stocks has been beaten down. At the same time, it usually performs very well after Fed meetings, because typically we are bullish after Fed meetings for the most part, especially over the last couple of Fed meetings, because like I said, and like I've said a couple times now, the markets expect so much hawkishness that any bullishness at all is seen as better than what it could have been, right? So let's dive into the information around AMC, and then we'll go ahead and wrap up this video, let you guys get back on with your days. I was just up in northern Michigan on Huron Lake around the Mackinac Bridge. That was a blast, and we're ready to get back to work, baby. But don't be fooled. Been watching the markets over the last couple of days, and some things have really been happening that are quite noticeable, like the trading algorithms, right? The stock market is trading right now solely based off of algorithms, and that's a big reason why I'm bullish heading into tomorrow, because those algorithms, they've been so bearish. They're pricing in so much bearishness. It's not going to take a lot to get a bullish reaction. Now, as far as AMC and the dollar amount that is currently sold short, you're sitting at $917.4 million. Estimated short interest of free flow at 19.39%. The free flow out on loan 36.11%. Shares out on loan 186.08 million. Days to cover 4.15, and cost to borrow at 17.71%. 100% share utilization is what we are sitting at. And then for today, 6 orders totaling $270,000. Positive order value of 64%. So all in all, a value over 50% tends to be bullish, tends to be a good sign. So today did look like a bullish sign. Now, as far as the S&P 500, if we take a look at the option activity for the day, 73% positive order value, orders totaling almost $1 billion. So why am I pointing this out? Well, because we were down over 1% on the S&P 500, but out of the total dollar amount, out of the almost $1 billion of options placed on the S&P 500, about $730 million out of that $1 billion was bullish. It was to the call side. It was, selling puts. That is very bullish. And where I'm getting 730 billion is because we're at, or 730 million is because we're at 73% positive order value for the day. So I do think that is a bullish sign heading into Fed Jerome Powell, because we could have been a lot more bearish, especially considering the S&P 500 was down over 1% today. So I do think that is a good sign. And then at the same time, the short interest is still very high. Over the past 7 days, the short interest in the S&P 500 has went from 17.62% 7 days ago now to 19%. The free flow out on loan went from 3.86% now to 5.84%. The shares out on loan up about 20 million, give or take. The days to cover is also up, and the cost to borrow is also up, whereas you do have 100% share utilization. So the fact that we have seen a lot more shorting heading into the Fed usually means that it's probably not going to be correct, right? If you see a lot of bearishness heading into the Fed, then you're expecting something, and you're expecting something bad, right? And if you don't get that bad or that worst case scenario or that gray swan, black swan, bad news, well, you're probably not going to continue to drop. And the fact that we were down so much today really makes me a little bit more bullish. And if the markets are bullish tomorrow, AMC is going to be ultra bullish, like I said. So tomorrow is going to be a big day, ladies and gentlemen. If we do see a big day to the upside for AMC stock tomorrow, keep in mind it's going to be after 2:30 p.m. once Fed Jerome Powell starts to speak, and we're not going to have a lot of time to really make that full move. So this is not going to be just an event for tomorrow. It's going to be an event continuing throughout Thursday and Friday as well. And if we get a really bullish reaction, we're going well past $10.92 per share. You're probably going as high as $13 per share with AMC stock. That would be this blue line right here. That would be breaking out above the 50, 100, and 200 day moving averages. And if you can break out above $10.92 per share. That highest moving average, which is the 200-day moving average, that is going to be a massively bullish sign for the algos, because that's what a lot of algos do trade off of. Now the RSI sitting at 41.24, so still on the oversold side, and the MACD is fighting between positive and negative, fighting between overbought and oversold. It looks like it can't make up its mind. It's kind of neutral right there. But nonetheless, guys, that's going to be it for this video. Leave your thoughts, comments, questions, concerns down below in the comment section. Would love to hear them. Get yourself free stock with Webull, Moomoo, and Public down below in the description as well. And if you guys want to trade with me live in real time, link down below in the description as well as all of that. So thank you guys for watching. I will see you in the next one.